I make it a point to visit every one of our 26 ships at least once a year. I need to see the product. I need to talk to the crew, make sure that they know I'm supporting them. And it's good to be on board the product alongside customers.
So your results, which were much better than expected, what does that say about the current climate, just the customer, or is that something, do you think, that's distinct to what's going on at Norwegian?
I was listening to Steve and your prior guests talk about the broad economics, and I can tell you that I've always believed that the government agencies and those who follow economic trends should look at the cruise industry as a leading economic indicator. Customers buy today a discretionary service that they're going to consume 7, 8, or more months down the road.
Right.
And today, as I mentioned yesterday in my earnings call, we're better booked at higher prices than we've ever had.
Talk about the pricing power that you now have.
Well, we have pricing power. We increased our forward guidance for the year on the back of higher pricing, higher yields. This is a fixed cost business.
Right.
So you win and lose based on your ability to raise prices over time to generate more onboard revenue, and we lead the industry.
Is it higher prices
places.
across the board? Is it higher prices at the high end? I know that you've developed a number of services at the higher end. Is that where the margin is coming?
They're coming across. You know, we operate 3 brands: Norwegian, Oceania, and Regent.
Right.
Oceania and Regent are high-end brands. As I mentioned yesterday in the earnings call, those 2 brands are now 50% sold for 2019, the fastest they've ever reached that milestone. During the course of the booking curve. So people are booking further out, which to me is showing confidence in the consumer who is putting money down today for a discretionary vacation that they're going to take in the future at higher prices. And we see higher prices not just in ticket, but in the way they're behaving on board. So you've heard about the millennials and experiential, and they don't want stuff, they want experiences. And experiences is what we sell more than anything else, whether it's a shore excursion, whether it's casino, spa, specialty dining. People are buying it at higher and higher prices.
So the consumer, from your vantage point, is strong right now.
It
is there anything that you could see potentially sidelining that? Are you worried about everything that's going on in terms of trade tensions around the world? For example, the impact that's having on steel prices. I mean, you're in the ship business.
Yeah. CEOs worry about everything, right? We're like fastidious mothers. We have to worry. Steel is not something I worry about. Our ships are built in Europe, primarily in Italy or in Germany. They're on fixed cost contracts. So the tariff riffraff is going back and forth. No, it's not affecting us.